Hello, everyone, and welcome back to the latest episode of Market Bites. Hope you are all doing well. For those that are in the UK, think, what day is it today? Thursday. On Tuesday was the hottest May we have ever, or day in May, we have ever had. And Brett, let me tell you something. It was ridiculously hot, and most of the houses here don't have aircon, so we were struggling big time. How are you doing anyway, mate?
With that, I won't say anything about the nice weather we've had. In Michigan, anyway, things have thawed out finally, and we're starting to feel like summer's around the corner. But I mean, everything's good. Markets continue to push up. It's hard to be, you get to that weird part of the market where, what's the S&P going for like its ninth straight week up, where you're like, you're a bull guy, you like up markets. You even start to get uncomfortable with how well it's done, right? I think that's like is always a phase of big rallies.
It is, and do you know what? I was just doing a little bit of digging around, a little bit of research, as you mentioned. So many markets, so many individual stocks are at all-time highs. So I was just having a little look at, doing a bit of rotation myself. But then I'm thinking like, okay, well, if I take a little bit of money out of here to go into these, is it the right time to buy something new? And you can imagine a lot of people are thinking about that as well. And then on one hand, the risk is you wait, you go more into cash, and the market just keeps going and going and going, and you miss out. And then
Yep.
it goes more, and then it dips again, and it's back to where it was anyway. So it's a tough one, I guess, for those that are sat on the sides at the moment. Also what people can do, of course, is average into a new position or take a little bit off the table on their
Sure.
investments that have gone very well. But I mean, some of these markets have just gone ballistic, haven't they? Like you mentioned, the S&P and the Nasdaq have absolutely flown higher. I mean, there are, in fairness, some that are lagging behind. I was looking every morning. I have six charts up in front of me. Oil, which is on the top left when I look at it, and then S&P and the Nasdaq, and they've just gone vertical. But then you've
Yeah.
got Bitcoin, which is running into big resistance at the 200-day moving average. That's on course for its third down week in a row. Gold, I know it spiked a little bit higher today of some inflation worries, but that's been struggling. And then I've also got the FTSE. Now the FTSE outperformed US equity markets last year, but it's
Yep.
it's lagging behind this year. That there's a fair bit of exposure to oil, energy,
Sure.
commodity related companies. So you can understand why it's just sort of lagged behind over the last few weeks. But there are some that, haven't been underperforming. I mean, one particular equity market that is leading the rest at the moment, I'm sure you've seen it as well, is the South Korean stock market, the KOSPI, which has just been flying up, I think 100% year to date.
Yeah.
But a lot of those, or I think it's, Samsung and SK Hynix are the two main companies within that, and they actually make up nearly half of the whole KOSPI index, which is always a little bit worrying when it gets that big. But that sort of global demand for AI chips has really helped push that market on, hasn't it? But so many assets at the moment, all time highs, Brett.
Yeah, you're right. When you look at South Korean markets, it really is that semiconductor component sort of fueling it. And of course, when you compare it to something like the S&P, it's going to be on a much smaller magnitude, but it's like the same story here, right? Like you're looking at the Nasdaq 100's up. We're coming up, I think we're like you mentioned at the top of the show, May 28th. We're 2 days outside of it being 2 full months from that bottom on March
Yeah.
30th. The Nasdaq's up 31, 32% in 2 months. I mean, when you're talking about market caps that are measured in the trillions, this is a very substantial move. And it does not have, I'm wondering, like, this is kind of like maybe a thinking out loud situation, but when money inevitably comes out as semis and memory, like you see the Micron hit $1 trillion market cap. You've got SanDisk has been leading the S&P virtually all year. Your Western Digitals, you got all these, AMD, Intel, everything's got all this money behind it right now. When that money starts to flow out, whether that's profit taking that snowballs or maybe just general profit taking, does that rotate back into tech? So like the beaten down Mag 7 names that have really sat out this rally. I think it's funny to always hear the Mag 7 argument about how too much concentration in 7 names does all of the lifting. These guys have hardly done anything this year
Yeah.
comparative to the semi space in general. Does that money rotate into those? They could absorb a lot of liquidity. Does it rotate into the beaten down software space, which I know we'll kind of touch on in a little bit with Snowflake, but or does it rotate into like the general sector, the lack of performance? It still is so surprising to me that tech has hit new 52-week highs this quarter. Only one other sector has also done that, even though the S&P is on a 9-week winner. That other one being real estate. So it's just a fractional little piece of the overall S&P compared to tech, which is like a third of it. But I'm curious, like, where is that money going to go once this train slows down?
Yeah, I mean that is it. I saw a few people, well, I've seen a few people over the last sort of few days talk about sort of that move from semis into physical AI, and that's been something I've been doing a little bit of research on. Maybe we can talk about that a bit more over the coming weeks. And in our analyst WhatsApp group, we've got all of these like Quant Claw and all of these
Yeah.
AI agents that are working for Yoni and all of that, and they've come up with a few different companies and portfolios based on that play, and that will be fascinating to see that. But yeah, when those names do inevitably slow down a little bit, your SanDisks, your Microns, that rotation will be fascinating. And you'd imagine it's going to start to happen soon. I mean, just on Micron, I mean, it's incredible the move that it had. To go from the market cap it did to now 1 trillion is just insane, that move. And this is another stock where you go back to when Trump first mentioned it. He told everyone, if you literally bought that, you'd have made hundreds of percent. I mean, it was only a few weeks ago, or maybe not even a few, might have been a couple of weeks ago. He mentioned Dell, didn't he? Literally like an off the
Yeah.
cuff comment. Dell's a great. I would, you should go out and buy them, and that jumps up tens of percent as well. So but yeah, that move in Micron, I know we talked about it over the last sort of few weeks, has been incredible, hasn't it?
Yeah, and I mean, I feel like we talk about, but we're at every episode now. It's like we can't. It's almost like it's inevitable. You have to mention something about, whether it's Nvidia's earnings last week, which notably is they are the interesting ones. How they are basically sitting out this rally. Of course, they did hit all-time highs recently, but when you
Mhm.
look at AMD or Intel or Micron, and you compare it to Nvidia on a performance basis, and we went into a whole discussion of it like a week ago, but it to me, it's still so interesting to see how tech is pushing higher, and Nvidia's. I think at least earlier when I looked today, Nvidia was down again.
Yeah.
It's been up like one day in the last 2 weeks. Um, it's interesting. You don't usually see that specifically like within the semi space, but now we're seeing like this interesting bifurcation within software, right? Like software as a whole made its low a couple months ago. It's very slowly creeping its way higher. You still have like your Salesforces, your ServiceNows are, they're not on the dead lows, but they're certainly not bouncing back. But on the other hand, you have like Snowflake reported last night.
Yeah.
They're up 35% today. Datadog reported a couple weeks ago. They
They're
kind of,
flying.
yeah, they were up 30% on their report. And now to today, from that report where they're up 30 to today, they're up another 20. I think there's another 22%. You look at cybersecurity like CrowdStrike and Palo Alto, they hit all-time highs recently. So there is like bifurcation within that group. And you're seeing them come to life where others still haven't. Now, I don't know if that rotation, gets going and sort of like fans the flames. Of your Salesforces, of your ServiceNows, of your Microsofts, all the other names that are kind of like waiting to go. Um, we'll see, but it is interesting to see parts of that group come back.
Yeah, I mean, we talked about ServiceNow, didn't we, a few weeks back? And you mentioned
Hmm.
Microsoft there. I think we would have chucked them in as a name. And, it does have that feeling. I mean, just, I was looking at, it's funny enough, ServiceNow's chart 30 minutes before we came on this podcast. And it has that feel, like you said, that, it's definitely not been flying higher, but it is off the recent low, and it does look like it's turning a corner a little bit as well. And Microsoft has sort of been steady over the last few weeks, really.
Hmm.
Maybe now that's time for it to push on as well. It's going to be really interesting over the next sort of few weeks. But I mean, just got on Snowflake there. I mean, they had a period last year where I think very early on, they were up like 120% from the low, and then it dropped back to that. So, down sort of 65%. And now obviously it had that bounce that it did last night off an earnings, and it just goes to show how volatile though these stocks can be as well. Because if you've got, in the space of 18 to 24 months where a stock goes 120% up, then all the way back down to where that was, and then up another 30-40%, that's hard for the investor to take that on the long term. Obviously if you time it, great, but you mentioned obviously the software situation, and it did look for a while like their growth was sort of plateauing a little bit. The AI costs were going to weigh on profits, so those high price stocks that had gone 120% or so, they got punished. But yeah, it looks like in the numbers quite strong results. They raised their outlook. They had big partnerships with AWS, for example, $6 billion multi-year deal. Their situation now will be judged over the next few weeks whether you get that follow through, because
Right.
you can jump 30% from a bad base where it's been down 65%. What happens now? Does it continue on, or was it just a little bit of a blip? I mean, you already see some people online saying, how on earth is it up that much? There's still a few red flags within the earnings, but I think when you have a low expectation, you can get rewarded for something being pretty decent. We go back to Nvidia, like you said, Brett. Their report was astonishing. It was, and it's gone down, and it's
Yeah.
struggling to push up just because maybe a lot's priced in, but also they're such a massive company. We kind of discussed it slash came to a conclusion that for those Nvidias of the world, the best opportunities of the last three or 4 years for those companies have been on the big dips. You get in,
Yeah.
and that's when that next leg goes up. You go back to the sort of the second, third month of the year. It still had a decent run, 40, 50, 60%. And then obviously last year, Liberation Day lows absolutely flew high. So you still get the decent sized moves in those big companies. In this period where a lot of that's already happened, you're going to struggle for that, really strong returns that you're going to get in. You mentioned it there, Micron and Datadog and all of these companies. And when I was looking at some of these physical AI companies, a lot of them have done big returns over the sort of the last few years as well. What else have we got to discuss? I wanted to touch upon Ferrari. Have you seen any pictures of their new EV?
I have, yeah. And what are your initial thoughts
Do you know
here?
what? I listen. One word is ugly for me. I listen. If someone gave me it, I'm going to drive it, and I'm going to think I'm the coolest person in the world. But on the looks of it, it isn't the most aesthetic car, I would say. But it obviously on the initial announcement, you fast forward then a couple of hours, it dropped 7%.
Yeah.
Probably a little bit overdone, really. I think it's going on the market for in and around about $600,000, maybe a little bit higher, maybe a little bit lower. Delivery starting late this year, early next year. Um, it kind of felt to me like, and I have to say I don't know all the rules and regulations, but in Europe you've got to have a certain amount of cars that reach a certain threshold of the carbon dioxide emissions or something like that, and anything that's over the threshold you get fined, and it's based on like however many grams over the target per vehicle. So obviously that can be very high. So it felt like to me they're just literally getting this out there so people they can meet this criteria, but they're still if you're going to buy a Ferrari, you're not going to buy an electric vehicle, really, are you? Or maybe I'm wrong.
It's important for investors to remember with Ferrari that it's an automaker by its technical definition, but its business model is not the same as like a Ford or a GM or a Toyota, where it's a volume. They play the game of volume plus margins, right? And that's where they're trying to find their growth and their profitability. Ferrari, they function differently because they do it in such limited supply. They have high demand. They have demand that far outstrips the supply that they put out on the market every year. That's why they sell out quarters in advance. It's why they have order books. All that matter. So this is not a mass market vehicle. People can say like, "Oh, I don't like the way it looks. It doesn't look cool. It doesn't look like a Ferrari is supposed to look." Maybe that was the intention. I'm
Mm.
not in the design room, but if they sell out their car, that's all that matters. And it's not a mass market vehicle. This isn't like them trying to disrupt Tesla and become a new mass market EV player. They just need to hit their order book quotas. And if they do that, their financials are already so strong from a margin perspective, from a cash flow perspective. If this is just one more piece of the pie, shareholders, I don't think they should be upset about it, unless the implication is thinking bigger picture of this is maybe the whole way EVs will go. But I mean, it's so early to react. Let's see how the order book goes. The word from the company is the order book's going good. Um, the financials for this company remain very strong. And the stock, this is not like this thing. I know it trades in euro, but also has an ADR in the U.S. So the U.S. Ferrari stock peaked at like a little over 500. We're not at 500. We're at 340. So the expectations should be different in my mind when the stock is down here versus if it was up at the highs.
Yeah, I'm with you. It felt like an overreaction. And I mean, that is just how quickly, though, a narrative can change. And social media is so powerful, right? Just across the
Oh God.
board. I mean, there's been so many, examples. We actually did a piece with PR not long ago just about the impact of social media, whether that be Sydney Sweeney on American Eagle, right, last year, or
Yeah.
when, certain celebrities mention a stock. I remember, when I did the research into it, it was like Kylie Jenner mentioned something negative about Snap, and the share price dropped 20%. And it keeps dropping 20%, doesn't it, Snap? But there's been plenty of examples where this can happen, and suddenly it just takes a few people to say, "What on earth are Ferrari doing? They're ruining their brand, this, that, and the other," and you're down 7%, and then you slow down a little bit. You hear from the CEO, you hear from analysts, and you think, "Okay, we overreacted there." But that's just the way things can happen now. And we talked about this religiously over the last few years. Markets just move quicker now. Dips get bought up quicker, they move up quicker, down quicker, reactions to headlines, everyone's getting the news, obviously algos, you chuck all of that in, and things just can escalate very quickly. But yeah, I'm with you. I think it's a bit of an overreaction. And just on the, I guess there's a little bit of a link to Ferrari F1. Also, there was the news, wasn't there, about Alpine and Gucci, where I've just struck a deal for Gucci to take over BWT as Alpine's car partner, or whatever the real definition is, which would be pretty cool, I'd imagine, for those Alpine drivers next year, walking the streets in, or walking the grid in full Gucci gear. Um, but yeah, fascinating times, and I'm sure this time next week there'll be some news stories for us to discuss. Brett, anything else on your mind, or wrap it up?
Yeah, I mean, I guess the only thing that jumps out to me is, everyone's focused on tech, the microns, the memories, semis, all the yada yada yadas. But small caps are so quietly
Mhm.
floating under the radar. They are on, if you're looking at the indices or the ETFs, say you look at the QQQs instead of the NASDAQ 100, or the IWM instead of the Russell 2000. Either way, those are sort of the proxies. But um, I think coming into today, the Qs were up like 18.8% on the year, off by a few decimal points, I'm sure. But
Yeah.
IWM up 18%, way outpacing the Dow, almost double the S&P. They are going like clip for clip with tech right now, and all the headlines are either AI or geopolitics, but hardly anyone's talking about small caps. So that's kind of an interesting story to me, especially with the 10-year yield's been up. That's up about 4.5%. Talk now is hawkish Fed, hawkish central banks. That's not good for small caps, and yet they continue to push. So that's a super interesting, I think, under the radar story for me at this point.
Yeah, absolutely. Maybe something we can focus on a little bit more next week as well. This last thing, obviously for people looking at the market, there's been a couple of positive geopolitical headlines today, just on the deal between Iran and US, and waiting for Trump's approval, and that spiked equity markets to new all-time highs. Of course, the Nasdaq above 30,000 for the first time ever. So you're witnessing history day by day, and S&P new all-time highs as well. But we did get an inflation reading earlier, which was a little bit higher. Market kind of brushing it off at the time, but it might be something we discuss in a little bit more detail over the sort of next couple of podcast episodes. But Brett, as always, been an absolute pleasure. Thank you for joining.
Yeah, look forward to we'll get Neja in for the small caps talk.
Yes, absolutely. Neja, we miss you as well. I know you're busy today, so we will catch all up together next week. Take care, everyone. See you then.